Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to give you my opinion on where interest rates are going to go in 2024. It's a big question that I get asked a lot. Should I be fixing for 2 years now? Should I be fixing for 5 years now? Should I go on a variable rate and wait for the rate cuts later this year? Well, we're going to talk about that and all the options that are available to you so you can make a more informed decision. But before we do that, you should always go to a broker and look at your own financial circumstances. I can't guess what your disposable income is and affordability and stuff like that. You need to go to a professional broker who can work this stuff out. But this will help you have some knowledge before you go and have that conversation, at least, so you can look at the right path for you. Now, before we jump into this, as always, make sure you do subscribe to the channel over there and hit the bell notification. We're going to hit 25,000 subscribers this month, which is incredible, but I want to get there a little bit quicker, and you can help me get there. And while you're here, smash like, tickle like, do something to that like button, guys. That really helps with the YouTube algorithm. Means you're a great person as well. And it gets us more views on the channel, and that's what we want, right? So, lots going on at the moment. Well, it's been an interesting week, actually, because finally central banks around the world are starting to cut rates. In fact, earlier this year, Switzerland went quite early, which wasn't on my radar, if I'm totally honest. But this week, we have had two big central banks that have dropped rates. First, we had Canada. It's a G7 country, so fairly powerful. They dropped their rate, which was really a great start by 0.25%. Then the European Central Bank. Now, that's more important because that's one of the top three banks in the world. You've got the Bank of England, the Federal Reserve, and the European Central Bank. They've dropped their rate now to 3.75%, which is good. Now, what they also said was they expect inflation to come roaring back this year. And even though inflation is expected to go back up, they're still going to be cutting rates and signal that they're going to cut more this year. So positive news there. Now, the Bank of England was looking like that it could cut rates in June. Then Rishi Sunak decided he wanted an election in July. I think that he just wants to get out of office and then go on holiday. Because it's not looking likely that he's going to win, but he might, who knows. But yeah, he called that election, and that has meant that the Bank of England might not cut rates in June, even if they want to now, because they don't want to be seen to being political. Because if they did cut rates, it could help the Conservatives, right? And so that is something that they want to avoid. So they could easily just wait till August meeting, right? We'll see if that happens. Now, we've also had this week, we've just done a video, and you can watch that from a couple of days ago, talking about tracker rates. Lots of people in the comments are always saying, should I get a tracker rate? And I'm saying, no, don't. But I might have changed my mind on that. So go and check that video out and see what we think about a tracker rate right now. So what options have we got right now? Well, you've got a few options. First, we want to talk about, should you wait? So your first option is, should you wait? Let's just say you've got a deal that ends in June, right? Like a few of you that comment on this channel. Should you wait right now? I wouldn't. Here's what I would do. I would, if I had a rate that expired in June, I would probably pick some sort of rate. I would either pick a 2-year rate, a 5-year rate, or a tracker rate. We're going to go through those as well. But I would make a decision on that, right? That's if you've got something that's going to happen, because I don't think rates are going to massively drop this year. I think the best case scenario is you might get a rate 1/4 or 0.5% better. But if you wait for that, let's just say that happens in October or November, that the mortgage rates start getting better, you'll have paid many months at a higher rate on a variable rate that will be 7-8%. So it wouldn't have been a smart move, and you would have paid significantly more than you would have saved. So I would fix something now, right? So would I wait? No. Here's another thing. If you've got a deal that is going to end in October, November, December, you can fix your rate today. Why would you do that? Because rates are potentially going to drop. Well, they might not. Rates could go up. If inflation comes roaring back and the rates start going up again. I don't think that's likely, but it's possible. Let's just say you fix your rate today, but you don't start that deal till December, till your old deal runs out. You just fix the rate today. You can do that with your bank. Then let's just say rates go up. You've then fixed at the best rate that there was. However, if rates go down, because you haven't started your deal yet, they will let you move on to a lower rate before you start the deal. So this allows you to fix the best rate, the worst case scenario, but it also gives you the option, if the rates improve before you start your new deal, you've got that option to switch on to that. That's a smart thing to do, and I would look to do that. Next, 2 or 5 years, because this is the big question you've got, right? 2 or 5 years. So many people are unsure on this. I did a video on that recently, which got tons of views. So definitely it's something you're asking yourself. That depends on your appetite for risk, right? And so I am someone that likes to risk stuff. I'm an investor. I'm not a steady Eddie. I'm not that fussed about knowing what the rate's going to be for 5 solid years. I would always take the gamble myself. But most of my friends are not like that. Most of my friends would fix for 5 years. They want that certainty. They want to be able to predict what's going on. That's what I would look at doing. And that's if you want the certainty. However, if you can afford rates to go up, you could fix a 2-year deal. And if the rates got worse at the end of that 2 years, you'd be okay. Then I would look to go on that. So that really depends on your scenario. Who's the best person to answer that question? A broker. A broker knows your income and expenditure. It knows how leveraged you are. It knows all of this stuff about you. And that's the best person to answer that kind of deal. Next question is fixed or tracker? Well, as I said, for the last 2 years, it's been fixed. 100% has been fixed. But things have changed now. And in fact, this week, go and check the video that I've just made on that a couple of days ago. But this week, tracker deals are actually cheaper on average than fixed rate deals. Not much. I've got the details still here. So the fixed rate average deals are 5.95%, the average deals, right? You can get better, you can get worse. But on average, they're 5.95%. A tracker is 5.94%, but it does look likely that interest rates are going to drop. I would bet quite a lot of money that interest rates will drop before Christmas. I wouldn't be so sure on if it's going to be in June, August, November. I'm not sure on that, but I'm pretty confident that rates will drop this year. And so if that happens, your rate will then go down because you're tracking down. And some of the tracker rates are only 0.01%. 0.01% above base. The base is 5.25, right? So if it goes down, your rate will then go to 5. Let's just say your rate, it goes down to 4.75, 2 cuts. You'll be then paying 4.76%, which is way lower than the average. So that's something to consider. But again, that's for someone that can afford rates to go up, down. You need to speak to a broker to get the advice on that. So that's where I think rates are going to drop. I think myself, interest rates, Bank of England rate will drop twice this year. I think your mortgage rate, though, if you're on a tracker, you'll get the full benefit of both those drops. If you're on a fixed rate and you want to get a new deal, I think that the best rates will be about 0.25% better than they are today. I don't think they're going to pass everything on to you guys because I think they've already been dropping the rate prior to all of this in order to get your business. Let me know your thoughts in the comments below. Do smash like, do subscribe and hit the bell. Share this video with someone. Just, if you hit that share button, you can share it on WhatsApp, Facebook Messenger, email. I'm sure you know someone that has got the mortgage dilemma at the moment, right? So do share this video. Check out all the other content on my channel, including this video right here.